What's up, everyone? Today I'm gonna interview one of my favorite and fellow investors that he started investing young, and I really like you to listen to his story. If you are thinking of investing, this podcast is for you. Stay till the end because we're gonna drop a lot of information that it could change your life for the better. Thank you so much, Andrew, for coming to the podcast today. I would like to ask you, when was your first time you bought either a home or a rental property? And how old were you? And what year it was? Just to give the
Thank
audience.
you for having me. Thank
Yeah.
thank you for having me. I always wanted to buy property. I think the first one was shortly after the credit crisis. Probably on or around 2009.
Okay.
2009, 10.
Perfect timing.
I would have been about 22 years old.
Okay.
Yeah.
Awesome. That's great.
Yeah.
So you started young, and you kept going at it. So that's really good. So my follow-up question is, how did you go about it? What is the thought process back then when you bought your first property, and how did you secure the funding? Because funding is like the down payment is always the big hurdle for
Sure.
new generation to get into real estate investing. So tell us more.
Sure. So the from a actual very young age, I'm talking 8 years old. I kind of caught
Awesome.
on, like, the people that own property,
Mm-hmm.
they are stronger with their finances than those that don't. That's just what I personally saw.
Agree 100% with you.
Furthermore, people that have their primary and rentals have extra streams of cash flow,
Okay.
which also really help them. Perhaps not in their 30s, 40s, 50s, but as they get older, it's just a big part, of their it just actually really helps their quality of life. And
exact-
that's what I saw right at an actual very young age. So from day one, I was really eager to buy property.
Mhm.
I would always save money, saving birthdays, Christmas, Easter's.
Amazing.
Yeah. So the market had challenges, right? 2007, 8, 9, and
Big ones.
prices were actually coming down. And I was in college, and I bought a property with a partner. That's the one, and then the only time that I've ever purchased with a partner.
Partner.
But I brought in the money. She had the credit, income, job stability.
Yeah.
And we purchased the property. I was freaking out because we purchased it. I think it was like $260,000,
Okay.
and the price kept going down.
Okay.
I think it bottomed out right at about 190.
Okay.
But now it's about $400,000 plus.
Nice.
Even more.
Nice. And to give the viewers perspective, that was locally here in Los Angeles area.
The very first one was in Victorville.
Victorville.
Yes.
Okay, so
Victorville,
not LA. I think San Bernardino County,
Correct.
maybe. Okay, sounds good. But it's local enough for you to manage it
Right,
yourself.
right,
Yes, yes.
At that age, I didn't really care what
You just
I
want
knew,
to get your foot wet.
right. Yeah.
Yeah.
I just knew that my personal goal was actually build assets,
Mm-hmm.
and perhaps in 5 years, 10 years, I can trade the
You have a
house
plan.
for a fourplex,
Mm-hmm.
or trade the house for 2 houses.
Mm-hmm. Andrew was doing Monopoly, real life.
Right.
Awesome. So
I think about that though, at
yeah.
at an actual very young age with my grandparents. We would often play that game,
Okay.
and you just things kind of make sense.
Yeah, exactly. So speaking of grandparents and your family, when you were 8 years old, was there any like a figure in your life that you look at him and you said, I want to be as educated and wealthy like him, and he had rental properties? Or what was the motivation at age 8 to make you like investing?
Yeah, no, I was blessed with a great family,
Okay.
great family, and everybody owned owned
Their
their
home.
primary homes,
Okay.
and both of my grandparents, both of them had cash flowing from from the actual rental properties.
So they have a
So from
rental
a very
property.
young age, I said, "Whoa, that
That
makes
is,
sense." Yeah, I would go with them, door by door, asking for the rent.
yeah,
Yeah, so I
awesome.
just caught it. It just made sense to me.
Okay.
Yeah.
It ignites the idea.
Sure.
So my big question to you, Andrew, is how did you go against the current of young people to spend, and you were able to save to get the down payment? What made you be able to do that? Was there any was it did you teach yourself mentally? How did you do it? Because young people, they money comes in this hand, it goes the other hand.
No, I think the only
How did you manage?
yeah I've always tried to think of life in like longer term,
Long term.
not for
Short
that year
term.
or that month, a long term. And I would say what I did dodge is a lot of people do flips.
Okay.
Like I don't knock it.
Okay.
That's perfect, but it's taxed differently and higher tax, right? It just seems like you're taking the money and you're profiting, but you're gonna live off of some of it, and then you're buying again, and then the minute you stop buying,
That's it.
yeah, that's it. So I didn't want to do that. I said, you know what, I would rather focus on my career, my trade, which is finance,
Yes.
and I'd want to buy and hold.
Mm-hmm.
But in hindsight, I mean, I probably could have done flips too, and I probably would, it probably would have been harder to hold on to assets if I kept selling some of them off.
If you do like many transactions that is not leading you into the position that you want to be in the future.
Right.
So you never done flips in your life.
I mean,
period. Have you done it and you didn't like it and then you decided?
Every property, Dolph, that I've ever sold, I look back and think, like, why did I sell that property?
Okay. How many did you sell? I know you are a firm believer. Buy and leave.
I would say 10.
My kids.
10 properties, yeah.
You bought and sold.
Correct.
Okay.
Yeah. But at those times, like I didn't know about adding guest units or making a two bedroom, one bathroom house a 4-bedroom, 2-bathroom house.
So you didn't utilize the full expansion of benefits.
Right.
You just exit prematurely.
Correct.
But I'm sure you bought something else with it. You didn't.
That's true.
Yeah.
That's true.
Do you do 1031 exchange, or you buy and wait and then?
I would just buy and wait.
Okay, so you have to pay the taxes. You have to pay Uncle Sam.
Keep in mind that at that time, I feel like I was very young, and I just didn't know. I didn't see it. So
okay.
I just probably rushed.
Which is fine now that you have the education and the information, that mistake learned and lesson learned.
Keep in mind, all these podcasts, this was not there.
Okay.
In 2008, 9, 10, 11, 12, right? I mean, it's a kind of newer fad, and we didn't have access to this.
Exactly.
Content.
See, that's another reason why you should listen to this podcast, share it with your friends, so the YouTube will promote it to other people, so they benefit as well. Andrew, I wanted to ask you a very important question. Why real estate? Why not stocks, bonds? Why specifically real estate?
That's a very good question. Personally, for me,
Tell the audience why it's worth it in your own words.
well, I mean, both. I think both are actually very, very good. I would say this. I think me personally, property just actually makes sense tax wise. I'm a lender by trade, so like I can look at a deal, right. I can I can actually comp it out. I can talk to my contractors, see what actually has to be done, and like I can tell very, very quickly, is this a deal or is this
No
not a
deal.
Whereas stocks, you basically have to dig through balance sheets, read their
Harder.
handbooks, and I think it's harder to get transparent data. And there's other people that probably know much more right about it than I would know.
Exactly.
So I think personally I have the upper hand buying the property.
Buying.
On the flip side, I think buying property, there's kind of more to it. They're actually risk assets. It's more active management. You're constantly dealing with challenges, questions,
Tenants, vacancy,
Exactly.
all these kind of things.
Whereas stocks, you don't really have to deal with it actively.
Okay.
But personally, I think I have the upper hand personally, with the property, both tax wise and then also just to basically find deals.
Okay. Sounds good. Sounds like a very good.
I read this note. It basically says if you had an inside lead that an actual stock is like going to go up or it's being offered at a discount, people get prosecuted for it.
Okay.
Right? It's
trading. You
trading.
should not do that because insider trading, they
Right,
call it.
right. But housing, you
Market gonna
may
dictate.
know, well, that, and then you may know this seller just wants out. It's a bad tenant. You basically have to deal with that tenant. But when you do, you're buying an asset for 50 cents right on the dollar.
Exactly.
And so it's
Is that some of the properties you bought? Like it was a troublesome and it needs a little bit of work from your side after buying?
almost all of them.
Almost all of them.
Right.
Okay. And how was your experience with the bad tenants? How do you talk to them to make them either leave? Do you give them cash back? Do you tell them that you are not if they are not paying rent, they have to leave, or
Right, no,
serve them in court?
I personally, I mean, we all have our styles. I have found that if you try to help people,
Yes.
and you come direct and you don't it's not anger,
Transparent.
it's rational.
Yes.
What can we do to basically solve this
Issue.
this challenge? If they're 2 months backed up, it's gonna be very, very hard for some families to pay 2 months past due plus this month.
Yeah.
So you just work out
A plan.
work out an actual plan.
Okay.
But if it's a pattern, if it keeps happening, then I would pass it over to legal.
Okay. Sounds good.
But I would say I would do that last.
Yeah, like you use all the methods in the beginning, the easy ones, and then if not, then you go to the next
Correct.
level. You cross the bridge when you.
And when tenants call you, when they ask you for help to fix certain items, fix a roof, fix a trash can, fix it quickly. Be very, very efficient, because the tenant is your client.
Exactly. You provide like the best service, so the clients will stay with you.
Correct.
So my next question to you, Andrew, is which is a very critical one. How do you analyze the deal, like you mentioned, to make sure that this will fit in your portfolio for the long run? Or this is not a good deal, let's move on to the next deal.
Sure.
How do you analyze? How do you,
I
your thought process?
No, sure. I was once told that simply buying a property that's there is no skill to doing that. You're just basically finding a place
A property.
to basically park your money.
Yes.
So the actual skill comes with like trying to look at an asset, and then seeing what's this property's highest best use. You know, if it's a house, right? Can I basically add a guest unit? If it's a fourplex, can I push the rents? Can I add a washroom? So it's constantly it's a quest of basically just trying to find out what is a property's highest best use, and then having a plan for it. Personally, this this is just me. I'm at peace if I can get into an asset, and for 2 years, right, I'm in a holding pattern. But on that third year, right, I'm going to get it into planning, and then execute my business plan.
Okay. So after 3 years, do you leverage yourself? Like you pull money out, or what do you mean by your business planning after 3 years?
Well, I mean, meaning let's say
3 years.
that I have a property, right, and the tenant's paying, let's just say $3,000 per each month.
Okay.
And my payment, right, is $3,200, right?
Oh.
Let's just say.
Okay.
So I have a $200 per each month carrying cost loss.
Okay.
I'm at peace with that if I have an exit plan, meaning year 2, 3, perhaps I would add on a guest unit, or I would add on a add
ADU on the back or
correct,
something.
that,
Yeah.
I can add an extra bedroom, bathroom, and then take rent from $3,000 to $3,600. But it's all about planning, and those plans take capital and also time.
That's what you mean by planning. I like it. How about future expansions, like adding an ADU on
Oh, right,
and
same.
then you double the income.
Correct.
That will
Correct. And on my contracts, I always list that we have the right
to
add the guest unit
in the future.
Correct.
Actually, that's really good. You be upfront with them, tell them that there is a future expansion. Please don't be alerted later.
Right.
That's good. And then how about the leveraging? Because I know, like 5 years, your loan to value is so low that you could pull out cash. Would you ever pull cash out? Have you done it before? Like you pull
Oh,
cash
sure,
to
yeah.
buy?
Sure. Yes, I've cashed out to purchase, but this is an actual whole new climate, and I'm kind of still in this actual new territory where everything I have right now is financed at a really low rate. If it's 2%, 3%, 4% fixed rate.
Yes.
So now rates are rates are a little bit higher.
Yeah. So
So
you
now
can't do that now.
I mean, you can, but your payment basically doubles. Your interest rate doubles.
Exactly.
So now what I've been using is some of them credit lines, some of them are fixed rate seconds.
Little bit higher, but
exactly,
fixed.
exactly. And I would look at the blended rate, right, on that property. The first rate, right, and the second should be cheaper than just taking one whole loan.
Yeah.
Right, at the current market.
Yeah, that's a great idea. I did not think of that. That's awesome. Thank you so much for sharing. So Andrew, this question is also important. How do you get funding for your deals? Like, how do you keep? So let me ask you first. What is the buying pattern? How many per year is your goal to buy?
Good question. I think my average right now has been a purchase every 6 months.
6 months.
But that's over the last 12 plus years.
Yes.
But right now I'm at peace to go longer, right, without purchasing, and then perhaps two deals come up, and then you basically
You
just buy
buy
two at the
both
same
of
time.
them. Perfect.
Yeah, there's no rush.
Okay, and so the follow-up question would be, how do you get the money to buy those deals? Like, what are a good things to do to always get funding to keep buying, basically?
I mean, I try not to cash out often.
Okay.
I actually do own a company. We do finance. We finance home loans.
Mm-hmm.
So
You
I just try
use
to
the
save.
income from that to keep
Correct.
buying.
Hmm.
So that's the only option.
That and credit lines work too.
Okay.
Credit lines,
Sounds good.
HELOCs, seconds. But the concept is that the what I'm purchasing should debt service the credit line.
Exactly. So you always have a positive cash flow in the beginning, hopefully. If not, then within 2-3 years.
Correct.
Yeah.
Now, if a property does not have cash flow, I will definitely make certain that within due time, a year, 2 years, we can actually force cash flow
Okay.
by adding a extra unit,
Mm-hmm. That I like
adding an
that
extra
idea
bedroom, bathroom, or just raise rents, over time.
because with time, things increase in value, so you
Correct.
increase the rent as well.
Right.
So, Andrew, I will end up with this last question, which is a personal question. How did you learn how to invest correctly? Did you use a mentor or did you self teach yourself? Like,
Sure.
what
No.
route did you take
Yeah. No.
to learn how to
from
be very
from the onset, like I said, I have an actual great family, but they kind of told me, I kind of lean towards the low risk quadrant. I don't like I don't really push high leverage,
Mm-hmm.
so that's gonna built into my my DNA.
okay?
But I would say like through the years I've kind of learned from clubs, from colleagues, people like actually you,
Thank you.
learning constantly learning, and this is a this is an actual skill set. This is not luck. This is not
Asking
is
the
not
right question will get you
correct.
long
Correct.
in your
To
journey.
buy properties right at the right price, to use the correct financing structure, to manage correctly, legal, to buy properties with actual least amount of money into the deal.
Mm-hmm.
These are all newer concepts. So
Yeah. But they are very important. They are
Very important.
crucial to
Yeah.
being successful and keep buying and increase your portfolio with time.
The first few purchases, I used to think that you just basically save your money, put it all into a property, and then wait again till the next year when you can save more money.
Exactly.
And now it's like I've kind of learned you can find properties that are discounted deeply, and you can use money that's not all yours to buy it,
Exactly.
and then now you're basically buying properties at half off,
Which is great.
fix it up,
Yeah.
and then now
Force appreciate the value.
but your own money, it's minimally in the deal, right?
Yeah, exactly.
Which lets you pick up more assets.
More assets doing that way. So one last question. How many doors that do you have right now? Let's tease the viewers.
54 doors.
54 doors.
54 doors.
Great. Over you said 12 to 13 years.
Correct.
Yeah, that's awesome. So Andrew, what do you do right now to get the ball rolling? I know a lot of people are on the fence,
Sure.
but they want kind of like a simple guiding advice, and from you, you have done it before. So tell them, what should you do right now in this current market,
Sure.
because each market is different.
Sure. So
It's different.
the first step is to build your team. You need an excellent broker. You need a lender that understands your whole file. How
I
does
agree
the income
100%.
flow in and out, right, of your of your household. What are your liabilities? What are your actual strengths? Where to know your actual file very, very well. A contractor that you can call right on and just basically break down the project and then get a rough baseline cost, and that's the first step. Later, a good lawyer and a good company to basically help you manage. But those are the first. That's the first step.
Okay.
And for the financing, I would say like strongly craft it. This isn't going to happen by accident. Really build your profile. Get a matrix of every program, right? You can qualify for, and the property dictates, right, which of those programs
Exactly.
you would utilize.
Mm-hmm.
Not every program, right, lets you buy a property which needs work. Not every program lets you buy units. Not every program lets you buy a house with a guest unit and counting rental income to qualify. So every single program's different, and if it was me personally, right, I would want to have access to all of them.
Well, thank you so much, Andrew, for this beautiful, informative podcast. I hope the investors, the wannabe home buyers or like rental properties, you learned a lot from Andrew, because he is a great guy. He have done it correctly, and a great friend, and I learned from him a lot in finance and also in investing. So they come hand in hand. So take care, and I will see you in the next video.